Okay, we're live. So this is totally discretionary. All of this is going to be discretionary, but we'll start right here. Selected time frame only fastest. I only do random generation. It's like a brute force thing. I think it could get the same results as a genetic evolution. Mark will have to correct me if I'm wrong. If genetic evolution can make strategies that random generation cannot, but I think random gen can make anything that genetic can. So that's why I do it. Saves time. Instead of doing genetic and random, I just do random for a very long time. That's my style. I do it on selected time frame only fastest. Go over here. I always do long and short. I always do symmetric. I feel like that's much more robust. If we start doing separate rules for long and short, we're getting a little bit too over optimized. Stop loss always required. I rarely require a take profit. I like to leave profits open-ended, let the market go as far as it can, and trail a stop. I was using it on my last generation because it was a 5-minute base strategy, and I was trying something different. Stop loss always based on ATR, not pips. The market is always changing. ATR adapts to the market. Fixed pips does not. You will have to re-optimize the strategy every once in a while, more often than ATR will. Let's see right here. I don't think I have anything really changed right here. You'll have to check. Building blocks, that's probably the biggest one that everybody would like to see. Here it is. I don't use volume in Forex. There is no real volume in Forex. All the bank's volume is hidden. There is no central exchange recording volume. And I heard MT4 volume is bullshit as well. So volume, don't use it. Heiken as she candles. I never saw a professional strategy in any trading book using Heiken as she candles. I get rid of them. Price ranges. These are all price ranges. They'll give you all similar results. I just got rid of these to hopefully speed up random gen. I like ATR. I like bar range. Go down here. All the operators. That I've been thinking on which ones to get rid of, but I haven't been able to really decide. I don't think I can get rid of any of them. I need them all. I got rid of a couple moving averages just because there was so many. Got rid of momentum. Williams percent range. It's very similar to RSI. Don't want to have two of the nearly same things. PSAR, I just never really had a liking to it. That's personal preference. Ichimoto, I might add that back in. I've seen professional strategies use them. Got rid of this, got rid of this. Of course I got rid of average volume. There is no volume in Forex, I just told you that. Hour, minute, day of week. Don't really want those. Candle patterns, I do not use candle patterns. Every single trading book I've ever read that has tested them has never found any statistical edge behind candlestick patterns. None of them. On 20 years of data across all of the markets. Believe it or not. Simple rules. These are the most robust things. I gave them extra weight. I want my strategies based off very, very simple rules. They're more likely to be robust the more simple they are. Let's go over here. Enter at limit. I don't use enter at limit really manually trading, and I feel like a strategy has to be pretty smart, so to speak. Like built by a human, not by a random gen, to use that. Maybe you have some that have success with it. I haven't found any. Let's see, profit target. I added in here. I give it the option to use it but I don't force it. I don't make it required. Stop loss, it's required, and I gave it a 10. I don't know if that's stupid or not, but I gave it a weighting of 10. Profit trailing, nope. It's almost the same thing as stop trailing, so I just used stop trailing and I gave it a weight of 10. Stop trailing will start trailing right away. Profit trailing will only trail after the level of your stop will cross past your entry. So they're very, very similar. Profit trailing just waits a little bit longer. Move stop loss to break even. I love that rule in manual trading or in automation, EAs. I gave that a weighting of 5. Exit rule, I gave it a weighting of 2. There's my weightings, there's my stuff. I have no custom indicators. Money management, I always base it off percent. That is what every single professional trader does, always. They always risk a percent of their account. They increase their bet size as their account increases, and they decrease their bet size as they go into a drawdown. Drawdowns become limited by that, and when you're winning, it starts growing very quickly. It's very powerful. I don't use robustness tests in generation. It takes up a lot of time. I do that on the retest after I select certain strategies that I want. Here is ranking options. I'll go over here. Weighted fitness, that's how I select them and eliminate them. Net profit, I gave it a weighting of 5. I like profit factor. Drawdown's a big one, max drawdown. I got them both here, so that sort of is a double weight right there. Stability is a huge factor. Gives you a good equity curve, and I think that's it. Oh, stagnation, double stagnation, so it's weighted kind of by selecting it twice. I like low stagnation, low drawdowns, and stability. I might even increase stability. I'm gonna start using more weighted stability. Probably give it like a 2 for now. Number of trades, it depends on how much data you're using and what time frame you're on. I always leave it at 300 because if I do, let's say, a 5-minute time frame, I'll still have like 4 years of data I'll build on. If I do like a 1-hour time frame, I'll have much more than that, 8 to 10. So I usually stick around 300. I want at least 300 trades. I like a lot of trades. The more trades, the more smooth your equity curve becomes. Max drawdown, less than 30%. That's kind of an industry standard. If a hedge fund goes over 30%, they're fucked usually. People take their money out. They usually target somewhere around there, 20 to 30% max drawdown. Stagnation, I don't want to stagnate for more than 30% on any one strategy in my portfolio. Right there again for the out of sample. And stability, 0.8 or better. That will usually give you a nice equity curve. Not all of them, but for the most part, yeah. After I generate some strategies, I'll look at them by the equity curve. I'll move them all over to retest. I'll retest them on, let's say, I'll move it from selected time frame only to 1-minute data slow, and that'll give it a slightly better retest. And I'll look at their equity curves, look for the smoothest ones, the ones with the lowest drawdown and the highest net profit. I'll keep those, get rid of the rest. Then I'll use a robustness test on the new ones, test them, pick the best ones once again, maybe do slight improvement, then optimize it, and then I'll have my strategy, and that's how I do it. Comment any questions or suggestions.